All right, that's today's action specific to this moment in time, and there are people here who are thinking of 2020 in a strong, extreme bull case scenario on the markets. Karvy expects the Sensex to touch 1 lakh by the year 2020. The brokerage feels that from an equity market standpoint, macroeconomic revival in India will open opportunities to make strong returns in the next few years. To discuss how they arrived at that 1 lakh number and more on their targets. So we're joined now by Varun Goel of Karvy Stock Broking. Varun, good afternoon. Congratulations. You're a gutsy man to put that number out. Let me start by asking you how you got to that 1 lakh number and on what is it predicated when it comes to earnings estimates and GDP growth estimates. What are you relying on to be able to reach that 1 lakh by 2020 on the Sensex?
Well, good afternoon, Menka. I think the number, of course, it looks a little out there at this point of time, but if you really break it down in terms of year-to-year numbers, we would see that all we are talking about really is a 25% compounding from this point of time. So if we see 25% compounding in Sensex returns, from this point till 2020, we are there. And the reason why we say that is because we believe there is going to be a strong macroeconomic recovery which is going to play out in India. We are going to see a cyclical upturn. We are expecting a GDP growth revival from almost 4.5–5% at this point of time to almost 6% by the end of this year. And as the cyclical bottlenecks for the economy get removed, we would see the growth rate even getting faster. I think the good thing this time is, if you take the example of US, like when President Reagan came on board and we had Paul Volcker, who really broke the back of inflation, I think India would probably see a similar combination in which a sustainable low inflation will give rise to a equity market rally and an economic growth which would be sustainable over longish period of time as compared to the overheating that we used to see in the economy in the last few years. So our own sense is that if we see a 20 to 25% kind of earnings growth, of course some years will have less, some years will have more, and if we see a multiple re-rating from let's say 15 times now to 16 to 17 times, we could end at that 1 lakh number in 2020.
Varun, hi, good afternoon. That's actually now 26% compounded annual rate that you're talking about. But the markets would never move linear. There would be times when you will have 15 to 20% correction as well, maybe somewhere down the line. You're building that as well in your model?
Well, absolutely. So markets, as you rightly said, are never linear. There will be corrections along the way. We never know when a 10% correction comes up. It could be because of domestic reasons, it could be because of global reasons. But having said that, we believe that if there is a real structural change in the way economy is run, if we can see the revival of the investment cycle, if we can see something done about the manufacturing space, we are going to see a sustainable productivity gain. We are going to see significant increase in consumption demand, which is going to really take us there. We are looking at almost a 4 trillion economy by 2020, and that is what is feeding into our Sensex target.
Also, this 20–22% earnings growth, it's highly unlikely that we're going to see that maybe say next year. Then the task becomes even tougher 2 or 3 years down the line. Are you confident that we will have this kind of earnings growth, and what sectors would lead that?
Well, absolutely. So let me just take you through the FY13 earnings growth was around 5%, FY14 earnings growth is around 10%, and our own sense is that, as you yourself mentioned, that the next year earning growth is going to be low. So we are expecting around 14–15% earnings growth next year. But what we believe is that as the economy progresses, as sectors revive, we are going to see a much higher rate of earnings growth. Just to take us back to history, between 2003 and 2008, Sensex earnings did grow by 25% CAGR, and that is something which is not which is outside the realm of possibility at this point of time. Of course, I think the first 2 years there's a lot of cleaning up to do. There's a lot of work that we need to do to revive the investment cycle. I think that's the most critical aspect of this economic upturn. Once we do that, I think 2017, 18, 19 onwards, we are going to see earnings growth which are significantly ahead of what we are seeing now. Also, I think the good thing is that we are starting from a very, very low base. We have seen large parts of the market. So for instance, the banking space, especially the public sector side, the oil and gas companies, automobile and cement companies, which earnings growth has been extremely muted in the last 4 or 5 quarters. And when we are going to see earning uptick, the year-on-year growth numbers are going to look quite healthy.
So what stocks would you buy then, Varun? Because if the Sensex has to go to 1 lakh, stocks have to treble, they gain 400%. Index stocks that we're talking about, what stocks would you bet on in that case?
So I know, let's talk about the broad space. If you look at between 2004 and 2014, PSU as a space has significantly underperformed the private sector space because of either subsidy issues, either governance issues. So if we look at the oil and gas space, we would believe that the diesel subsidy would become almost zero in the next few months. Petrol subsidy is almost zero already. So we have a big upside targets on most of the oil and gas companies, both downstream and upstream. I would think the upsides would be significantly higher in the downstream companies because I don't think they will be having any subsidy burden going forward. Similarly, if you look at the public sector banks, I think if you look at FY16 book, they are still trading at much below their book values. And as the economy opens up, we are going to see some of the stress in terms of asset quality giving away. So those banks would also deliver significant earnings growth, again from a low base. Another sector that we like is infrastructure. I think as the capex cycle revives, companies in the road space, ports, highways, airports, they should start seeing good earnings growth. And of course the cement space, we are going to see a lot of investment activity, construction activity. The BJP manifesto talks about house to everybody by 2020. So I guess if even half of that happens, we're going to see big demand for cement companies and their products. So I think all these sectors, the Indian cyclical sectors, should do extremely well going forward.
But Varun, some of these arguments are too simplistic. For example, on the diesel front, we've seen in the past as well, diesel under recovery has come down to 2.5 rupees. All it required was a 10-20% rupee depreciation, or maybe another 2008 kind of scenario when maybe crude goes on the boil and rallies about 10 to 15%, and the equation changes again. What about that?
Well, absolutely, you're right. So the current, of course, estimate is based on the current macroeconomic scenario. Our own sense is that, and Governor Rajan, I think, has gone on record saying that he would like to see rupee between that 50 to 62 kind of a band. And I think, considering the fact there are a lot of global inflows coming in, I think rupee would have a appreciating bias in the short to medium term rather than a depreciating bias. So our own sense is that rupee is likely to trade around similar levels. So we don't think rupee depreciation is going to be a big risk. Now, as far as crude oil prices are concerned, if you look at the real driver of commodities, which is China, which has slowed down significantly in the last 3, 4, 5 years, and we would believe that global cyclicals, be it ferrous, non-ferrous metals, and even crude, are likely to stay muted till the time China gets its growth rate back. So India definitely is going to be a big beneficiary of the slowdown in commodity cycle, considering the fact that we import most of the commodities that are needed.
Varun, I have just one last question, slightly tangential, but when you build in these estimates of potentially moving to 1 lakh by 2020 on the Sensex, have you factored in and where the fund flow is going to come from? Are you going to see enhanced domestic participation? Are you focusing this on current foreign institutional fund flow being continuing at the same rate? Can you give us an idea of where you see the money supply coming in from to be able to reach that number?
Well, absolutely, Binga. I think that's a great question, because till now, we have really struggled with telling clients that it's a great time to get into equity. I think people, especially on the domestic side, if you take the example of insurance industry, if you take the example of mutual fund industry, or even PMS platforms, we have really struggled in terms of raising money because people have been scared. We've been telling people that 2008 Indian economy was 1 trillion, Sensex earnings was 800, and 2014 India is almost a 1.9 trillion economy. Sensex earnings next year are going to be 1600. So this time, Sensex at 25,000 is a lot different than 21,000 in 2008. And I think as the markets continue to run, as the economy revives, we will see a lot of domestic money, both on the retail and the institutional side, coming into the markets. And of course, from a global perspective, I think there is a huge opportunity in terms of getting incremental flows. So my bet is that going forward, people will move from real hard assets like real estate and gold and put more and more incremental money into Indian equity, and that is really going to solve the problem of fund flows.
What's been the reaction to your retail clients to this report, Varun?
Well, I must be honest saying that there is a lot of skepticism. There are a lot of good feedback. There's a lot of skepticism. I think people still look at what happened in the last 4 or 5 years with a lot of concern, and I'm sure all those concerns will melt away if the rally plays out the way we are thinking at this point of time.
All right, Varun, the wounds are still raw, so let's see whether we do hit that 1 lakh. We'll call you back in 2020 if we don't, to explain why we veered away from your forecast route. Thank you, Varun, for your time today, and thank you for joining us on CNBC TV18. Anuj?
I'll be happy to come back.
Okay.
All right, let's look forward to that then 1 lakh target. Let's move on then. Our closing bell money control question of the day is Karvy sees Sensex at 1 lakh by 2020. That's the discussion that we had. Do you share this optimism? Log on to moneycontrol.com and post your responses. We'll read out the most interesting ones post 3:30.